Cool.
All right. I'll do one last one. We'll save the smart money concepts for a different video. These are order blocks. We've talked a little bit about these before. So let's just let's take a look at today's trading period. Okay. So these order blocks are trying to say that there's volume, there's transactions that are happening in this area, and so there should be it's either support or resistance. So over here, this blue area is saying, well, you should expect the price to bounce in this area, and it does, right? It bounces once over here, once over here, and then peters out and then breaks. And then the idea here is that these boxes afterwards, these red ones, are resistance areas. So now when the price goes back up to this area, it hits and falls. Totally understand. Totally get it. Even here it's showing that this is a bullish blue area, and the price comes up, bounces a little bit, and falls. My issue with the order blocks is that there's no end to these order blocks, Peter. Like, there's nothing that tells you, like, just because this is a big area doesn't mean that the order block is strong. Like, it doesn't give you that information. If I were to replay this chart and start playing it, there's tons of order blocks. Now, you tell me if you're seeing any sort of indication here. So right now the price is inside of an order block. It moved out of it and went up. Why? Because that order block, this green order block was a sell zone. Now it's going up. It's bouncing off this order block over here. So the idea is that it's going to come back up to this area. I might come back down. But there's tons of order blocks around. Some of them are held and some of them are not. And some of them break and some of them don't. And I find this to be, on its own, very difficult to trade. You don't know how long a price is going to stay in that order block. You don't get a sense of how many orders are there. Nothing. Let's move this a little faster, as you can see. So if you were to use this to trade, you don't necessarily know if that order block will hold or not, or which ones you should be following. Right? Does that make sense?
Makes sense.
It does seem to, after the price has moved past an order block or through an order block or bounced off of it, then it seems obvious. But until much of the move is done, you can't really tell. This is why I like, but if I were to join this with my indicators, just turn all of them off. You'll see here that here we have a high signal. So saying the price is slowing down, right? So even though it's saying the price is slowing down, so even though it moved past it, expect it to come back. Expect it to come back where? Oh, come back to this order block area. Okay, great. So I have an expectation that when the price breaks out of this area, it will come back to it, which it did. You can also see the currents in the background. Here, if you treat the currents as, let me get rid of the chart. If you treat the currents as its own price, so here it's revisiting, here it's bouncing, you can use the currents, like you could just get rid of the candles and just trade the currents if you needed to.
Mm-hmm.
So here, as we see that the currents have broken back in, all of them have broken back over here, chances are this order block is done for. I don't have to wait for the price to fall out of this order block over here before I consider that this order block is weak, because all the currents came back into it. All the currents that passed out of it, these two that passed out of it, the purple and the blue, they came, well, purple, blue, green, yellow, all these different currents, they all came back into the order block.
And
so that suggests that this order block is now weak and that it's likely to break.
Well, if you didn't have the order block, what determination could you make?
For the short?
For once you get your signal and lets you know it's going to come back down, it's a fake out breakout, then how do you know it's going to consolidate back down?
Well, you don't know that it's going to consolidate, right? When you're making your trade, you're taking a bet that says, I'm willing to risk 2% in order to make 4%. And so you take the trade, And then if it succeeds, it succeeds. If it doesn't, it doesn't. It's just that you want to keep you want the probabilities to be in your favor that whatever trend you're banking on will succeed. So for example, let's say I got into this trade over here. And this now I did a short over here. Well, this went up and I would have failed that trade. The trade would have ended. I would have lost money on that trade. But then the question is, it moved up. And if I like the trade before here, I might still like the trade over here. So I might wait for the price to come down, bounce off the current, come back up. And once it showed this lower high, then it's like, okay, this energy that it took from this current petered out before it broke to a new high. So around over here, now I could short again. Because this guy told me things are slowing down. So chances are I'm going to come back to this level sometime. I'm going to get back to this level, which is what happened. Just like over here before when I said here, this is a low. The price came down to a low. So chances are we're not going much lower than that.
Right.
Or we saw one previously. Anyways, the idea is that the price could move past the tides a little bit, but chances are it's going to come back. I also talked at the beginning here that this idea that this current is calling the price back down to retest it because this went up too suddenly, as confirmed by this high tide. So there's multiple areas over here where I might retry to short again. And if I were to short around this area as I get the lower high, well, now I could ride this very casually down because I'd be in profit the entire way. Let's say I was too worried about this guy. So then I wait till it breaks over here. I wait till it revisits the current, comes back out. And over here, it's meeting resistance at my current. And that purple current, it came back down over here. Maybe I could short over here. Oh, it broke out and came back down. There's a resistance on this current. Maybe I could short over here. Oh, the current over here. Now all the currents came back down below this this one over here. Look for shorts underneath. Oh, I bounced off the current down over here and it came out. How much energy do I have? Oh, I only had enough energy to get over here. Short again. So my indicators are giving me multiple opportunities to get into positions for the trend, for the current move, all the way down to I get over here where it says, okay, it looks like we're done, and now it's gonna head back up. So chances are this price will keep coming back up to this level, and because our flow is still shown in green, then it'll at some point come back up over here to retest this level that we're at before, do something, and then break out. So this guy's telling me, this flow is telling me, look, we're still in a long position. This was just to day trade. But while we are, even though we're day trading, if I were going to zoom out to the daily chart, we're still in flow territory. Even if this price came all the way back down over here, the expectation is that we should be going up. Just like it was over here. The expectation is that we're going to go up. Even though we fell down over here, nothing undid the flow, so we should still be going up.
Cool, Tom.